Welcome to Property Get. Today we are going to discuss about a repatriation. Many customers having a property here and they've sold the property, they want to take back their money to their living country. So how do they take back the money? So they have invested maybe 10 years, 5 years before, and now they want to sell this property and take back the money to their living country. So it is basically a sale proceeds repatriation. NRI sale repatriation step-by-step guide. So I'm going to walking through each step this repatriation of money from in. This is basically for residential, commercial, and industrial sale. The target audience are overseas travelers, NRI, OCI, the people of Indian origin, and remote investors. And disclaimer: the idea shared here for information and education purpose only. I am giving an overall end-to-end high-level idea step by step. So the more detail on this need to discuss with the auditor, or you can connect with us. We can also help you because it will vary case to case. I have taken one sample and walking through this entire process. Maybe your country may be different, or you may be a joint owner. So there will be a small differences will be there that we can consult and make that happen. What is the first step of repatriation? So I am explaining this with a sample scenario. How does that, this entire process is going to work? So I am took an example. NRI Mahesh bought a flat for 52 lakhs when he was in Bangalore with an Indian savings money and SBI loan in December 2012. Sold in January 2025 for 1.2 crores, and he left US in 2018. The loan closed in 2023, and he wants to repatriate this to USA to buy a new villa. Can he repatriate this 1.2 crores to USA account? What are all the tax liabilities in India and USA? Is there any FEMA violation? So this is the topic today. So I took a sample scenario so that many owners can resonate with this, so that they can easily understand the end-to-end process rather than I talk about some specific law. So it's difficult to understand. So I took a sample scenario and walking through each steps. We have seen 1, 2, 3 steps in previous videos. Those who have not watched it, please watch that and come here so that you will understand this step 4 better. So what is this step 4? The report long-term capital gains in US return. This is the code number for USA return, and there is another code where foreign tax credit you will claim in 1116 form, and the DTAA double taxation avoidance agreement. And this entire process, this US CPA certified public accountant they call in US. And I also used in US this form and filed the income tax return. I stayed in US for a year and I filed returns in US. So I understand this process. So I just want to say certain things the Mahesh has to follow in US so that he'll comply the law in US. Convert net long-term capital gain in India to US dollar. So according to the first video, the long-term capital gain is 17 lakhs 12,000 is the long-term capital gain he got in India. That is equivalent to $20,488 as per the US. So the amount will be reported in Mahesh US return, which is this code number. In this form, he has to report that $20,488 as a long-term capital gain he got in India. So that has to be reported in this form. So I think Schedule D where he has to report this. So key details required: date of purchase and sale deed, and purchase price converted to US dollar, sale price converted to US dollar. The long-term capital gain calculation after indexation. There is a first video I discussed this. After the indexation cost, what is the long-term capital gain calculation? They'll convert to US dollar and put into this form. And form 1116 to claim foreign tax credit, FTC. This is he has paid long-term capital gain. He got it and paid that tax in India 3,056 and 96 rupees, which is equivalent to $4,140 he should claim because he already paid a tax here. So he don't need to pay for this long-term capital gain tax in US again. So declare this amount 4,140 in form 1116 so that he gets a tax exemption. This is as per the India-US Double Taxation Avoidance Agreement. So India and US has an agreement saying that an Indian citizen who paid already tax here in USA, they should not also charge. So this is between both the government signed document as per this document. So he don't need to pay tax for this long-term capital gain amount he got in India. This one. So proofs he has to submit. Form 26A has to be given. TDS certificate and ITR showing the capital gain tax paid here. So this also should be submitted that and submit the form 1040 with form 1116. So 1116 for foreign tax credit, 1040 is income tax return in US. So like our ITR here, it is an in US IT return form. So with this, he don't need to pay tax again in US. So one more thing is here in US foreign bank account report. So this is a financial crime enforcement network. There is a network there in US. So if any account, NRO, NRE, and FCNR account, who is an Indian citizen having an account in India, which exceeds $10,000, they have to report that so-and-so account has this. You don't need to pay any tax to US, but US government need to know that your so-and-so account has crossed $10,000 in one calendar year. They calculate as a financial year is a calendar year, January to December. So in India, April to March, but in US, January to December. So if any day, it should not cross $10,000. So that has to be, if it is exceeds, that has to be reported to US government. Similarly, Foreign Account Tax Compliance Act, there is another one where Form 8938 has to be submitted. That is, if it is exceeds the Indian asset crossing $50,000. In Mahesh's case here, it exceeded these two things. So he has to report this two forms to the US government. So this entire process, this US CPA, US Certified Public Accountant will help in US. So you need to meet him and explain these things and he will explain to you and you just need to give a document to make sure that these two things are done. If any violation in this, in per financial year, $10,000, they'll charge on Mahesh if they don't report it. This has to be made compliant with the US government so that he can avoid the penalties. If he don't submit this, he will be liable to pay penalty. One financial year per violation, $10,000. This is an approximate number. So the CPA will assist this entire process. Just make sure that you comply this requirement. This is our videos. We put it, in playlist investment. We have certain useful things, sale, buy, rent management. And we have our vision, mission, what we do, high level idea. And this is our service catalog, what are all things we do. And this is the book I'm writing, mainly for traveling guys. We'll be releasing this soon. There are certain business, consultant requirements. I have put more details on this playlist. Please watch for that. If anybody interested, can connect with us. We can work collaboratively. And if you have any requirements, you can post on our portal. And if you like this video, please give thumbs up and subscribe and click the bell icon. And comment if you have any questions, we can help you to understand and share with friends and family, those who are planning to sell property here and take the money back to their living country so that it will be useful to understand the entire step and do it as per the law. Thank you for watching. Thank you. Bye-bye.